earnings season. We're still analyzing a lot of numbers. But yes, a lot of stock-specific action is on our radar.
Indeed, and we missed talking to the management of Rategain. They reported their numbers a few days back, and it was a strong showing in Q4. The company clocked in a 70% jump on a year-on-year basis in revenues. Their margins expanded by 340 basis points to 17.6%. This drove a 191% increase in the company's profitability. They've also ended FY23 with a revenue growth of 54%, and they have guided for a revenue growth of 55 to 58% for next year. Bhanu Chopra, the Chairman and Managing Director of Rategain Travel, is now with us on the show. Mr. Chopra, morning. Thanks for joining in. You are guiding for a 55 to 58% growth in FY24, but this will include Adara, the recently acquired company. What will be the organic growth for the company next year?
So you're absolutely right. These numbers do include the Adara numbers, but I'm happy to report we are seeing a robust growth on both Adara and as well as Rategain core business. So we expect organically to grow about 20 to 25%, but including the Adara numbers, we will be north of 55%.
Okay, so the Adara growth in FY24 is expected to be around 30 to 35%. What about margins? You're expecting them to be around 17% versus 15% that you reported in FY23. What will lead to this improvement in margins? Will it also be aided by Adara?
Yeah, so if you recall, I've been on your show many times now since we've gone public, and we guided for 200 to 300 basis points improvement every year, fiscal year, since we listed in 21. So we're actually exceeding those numbers by a great margin, because when we came to the markets, we were at about 8% margin, and we went from 8% opposed to getting to 10, 11, we actually went up to about 15. And similarly, we will continue to guide for 200 to 300 basis points margin improvement. So we should end up at 17% for next year. And it's basically the advantageous business model that we have, which is the SaaS business model, where operating leverage begins to kick in. So we do expect, as we increase our revenue, every incremental revenue will have a much larger flow through to our EBITDA. In terms of Adara margins, they will be slightly subdued at about 15%. So, we've guided for about 15% margin on Adara business. But again, just to remember that when we acquired the business, it was loss-making. And very quickly, we were able to turn around, and within the first quarter itself, make it break even. Actually, we did have some positive EBITDA on it as well. And now going to 15% within 12 months of acquisition, I think it's a great achievement as well.
Bhanu, can this margin improvement continue indefinitely, or do you think at some point margins will start stabilizing? Could you give us the long-term aspiration on margins for the company?
Yeah, so, if you actually look at our business, we have our mature product lines, and they generate north of 30% margin for us. And the reason on a consolidated basis, we are much lower than that is because we continue to invest in the business, both from a new product perspective as well as, continuing to expand on our sales and marketing. So just as an example, we've invested significantly in adding sales power, this quarter, given the numbers that we had, and we want to continue this growth momentum. So we've added sales folks in Latin America, in the US. We're actually doubling down on Middle East as well, because that's become a very, very important emerging region for us. And there's usually a lag, a 6 months lag when those investments begin to pay off. So, on a steady state, I think, we can aspire to get to about 30%, but that's a long time away, because, given the fact that the company is still, small, we're around 100 million in revenue, but the potential is to be $1 billion in revenue. So there's a lot of headway for us. So we want to continue to reinvest while we continue to expand on the margins slowly.
So when the company achieves, say, $1 billion of revenue, do you think you can achieve those steady state margins of 30%? Is that the right operating leverage or the size?
Yeah, well, look, it's hard to comment. I mean, the aspiration for the management team is to continue to grow, and as you can see, we are a new age tech company. There are so many opportunities ahead of us. We're actually going through a huge transformation. I just want to slightly touch upon this whole AI and generative AI. So, as we go through these seismic shifts in our business, they can create huge opportunity. So at least for now, the way I see it is that, the headway is so strong that, we need to continue to invest. So maybe we can come back to this discussion, in the next sort of 3-4 years when we get there.
Okay, so we will discuss these interesting trends that you're talking about as well. Mr. Chopra, I wanted to talk to you about cash flow from operations. They were up 3 times on a YY basis, this time around 52 crore rupees. Your cash in books is decent as well, around 340 crore rupees. However, your free cash flow to profits, it was at 69% versus 156% in the year gone by. This is due to increase in receivables. Can you explain to us what is the receivable situation right now? Where do you see that heading, considering that you have added a substantial amount of customers as well in this quarter?
Yeah, so our DSO stands at about 70 days. And I think, when we compare it to our peers, we don't actually have peers in the Indian stock markets. I mean, we look at usually the IT services companies, and it's very similar to them. So I don't see any dramatic shift in our receivable situation. I think it's pretty good compared to the peers. And, we'll probably continue to guide for similar DSO number.
Okay. And the order inflows, you've won new contract wins worth about 130 crore. What could the potential run rate look like next year? What are the client conversations like? How many do you have in the pipeline?
Yeah, so, I have to state that in terms of the overall health of the company, we're the strongest ever that we've ever been in the history of the company. I mean, there is a huge pipeline of 380 crores, and it's, well distributed amongst all our 3 business lines. Our DaaS business continues to see some huge momentum with our OTA customers. We continue to expand on business with them. We entered the airline segment, and we've been sharing with you all the new airlines that we've been signing, but we continue to have a lot of new conversations that are emerging. It's a very, very, niche market with a, 2-player competition. So, we're gaining a lot of traction there on our distribution business. Again, we are well entrenched with the big chains, and we are seeing some good momentum there, continue to do pairings. And also the fact that we've launched 3 products that I've talked about in the past, they are seeing now some very good traction. So we continue to grow on that. And on Adara, which is our sort of a low-hanging fruit, it was pre-COVID about 100 million in revenue. So when we acquired it, it was about 27 million. So I see, the technology, the platform is all there to get it back to 100 million. So there's a huge potential there. And even in the existing quarter, we are seeing some very momentum on the Adara side as well.
Okay. All right, Mr. Chopra, it was a pleasure speaking with you. Thank you so much for joining us. That's the word coming in from Rategain Travel Technologies. Strong